Ag Day's Michelle Rook joins me. Michelle, this was to be the first report where USDA would factor in the trade war with China. Now things may have changed again.
Right, Clinton. USDA did provide some bullish ending stocks estimates for both old and new crop corn and soybeans in the May WASDE as they came in under expectations. However, USDA noted they'd considered only trade policies in effect at the time of publication, and without a formal end date, the report assumed those policies would remain in effect. So there is some skepticism about the report. At least on the surface, the May WASDE was bullish for corn and soybeans. USDA cut old crop soybean ending stocks 25 million bushels. New crop was 55 million below last year at 295 million bushels and below estimates due to strong demand.
Very good exports down the line here the last couple months, Michelle, and the USDA put that into account. Now, they did say they were going to take the current trade policy as it is into effect. Now, did they take the deal with the Chinese over the weekend? I'm not certain. But, the net effect is this carryout is less than what the trade was thinking for both the, old crop and the new crop.
Over the weekend, the U.S. and China both eased tariffs for 90 days. McCormick says while that may not be reflected in these estimates, he doesn't think a trade deal is either.
So with the fact that they've actually got the exports lower for new crop for this upcoming year tells me that they, at this point, do not believe we're going to get a kind of a second phase one deal where China is going to commit to buy a lot of grain.
USDA also provided bullish numbers for corn. Old crop ending stocks were lowered 50 million bushels to 1.42 billion. For new crop, carryout was 385 million above last year, but it was 220 million bushels lower than the average trade guess, as increased demand offset a record crop and 4.7 million more acres.
So that was the fear. If you got to carry out over $2 billion for new crop, would that drag this corn market down without a weather problem? Now you're down to 1.8. You've solved some of that problem.
McCormick says this leaves less room for error. However, are USDA's trendline yields of 181 on corn and 52.5 on soybeans achievable? He says maybe for soybeans.
The beans, I think, maybe a little bit better because your acres are down a little bit. The corn, Michelle, gets a little bit more interesting with these trendline yields because we've yet to hit trend in recent history. And if you look at these corn acres that they came out with in the survey in March, we're getting ground probably a little bit more of the ground it doesn't traditionally is the best ground in the United States.
Wheat balance sheets were bearish. USDA's initial winter wheat crop estimate was up 33 million bushels from last year, with yield up 2 bushels. USDA also raised ending stocks 923 million for new crop, 80 million above last year and above expectations.
It's getting bigger. I mean, the best hope we can get for the wheat is the market gets to a low enough price where we're going to stimulate some demand.
I'm Michelle Rook reporting for Ag Day.